Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, October 11th, 2013. A couple of news items today out of Canada. The unemployment rate dropping below 7% for the first time in about 4 years, actually a little over 4 years, to 6.9%. Kind of a surprise. Expectations were for the same as last month, 7.1%. So very good news out of there. And in the U.S., preliminary University of Michigan consumer sentiment, 75.2, below expectations and below last month. This is now the third month in a row where we're getting some lower numbers. They do get revised up slightly, but overall still kind of negative there on the consumer confidence levels. Well, hopefully as the U.S. government gets their issues worked out, those numbers will rise. Alright, on to next week. We got a few things up on the docket that have some significance. On Monday is the PPI and CPI out of China. No big expectations there. A little bit better on the PPI, expectations for a negative 1.4%, and on the CPI 2.8%, so a little bit higher than it was last month. And then in Europe, industrial production, expectations are for a positive 0.8%, as opposed to the negative 1.5% last month. So hopefully that will follow through. In the U.S. and Canada, it is a banking holiday, so there are not any real reports out for either one of those countries. Then on Tuesday, we get inflation numbers out of the UK. And no real big surprises there, although the PPI input is expected to be negative again. It was negative last month, 0.2%, and now this month they're expecting 0.1% below. So we'll see how that works out. Also, out of Europe, we have the ZEW economic sentiment numbers for both Germany and all of Europe. And all of Europe really expecting a pretty decent number there, 59.4. So we'll see how that actually comes out, but really does look good if we can keep up there and keep that moving up. In the U.S., the Empire State Manufacturing Index coming out, 8.2 is expected, 6.3 was last month. On Wednesday, we have claimant count out of the UK and unemployment rate expected to be about the same as last month. So we'll see if that actually comes out any better. That would be a little bit of a surprise, as some of the numbers lately have been showing a little bit of weakness just this week. So we'll see how that comes out. In the U.S. on Thursday is the Beige Book. That's the release of Fed assessments for the various districts to kind of see what's in line for economic situations. It used to be they would use this information for interest rate decisions. Apparently they're not doing that anymore, but it's still a decent bit of information. Also in the U.S. on Thursday, unemployment claims, again supposed to be high, 357,000. Last week was 374. So that was because of an aberration in California's numbers. We'll actually see if that comes through and if it comes down like it's supposed to. Also, the Philly Fed Manufacturing Index, 15.4 is expectations, 22.3 was last month. China then reports on Friday their GDP, industrial production, and retail sales. GDP expected to be a little bit higher at 7.8%, and industrial production a little bit lower, 10.1%, and retail sales a little bit higher at 13.6%. So that will have a big influence, of course, on the Australian dollar, as well as yen and everything else in that area. So we'll watch that closely as we come up. All right, the technicals today, we had a little bit of movement today. A lot of what seems to be positioning as the U.S. government fights out on their budget battle and their debt ceiling increase. So today, Euro-US dollar up 22 right now. Still got about 2 hours to close, or a little bit more, about 3 hours to close. And looks fairly good here, but we're looking more and more like we're building a top. We got maybe a shoulder over here, head here, and then we may start building a shoulder over here. So it's very, very possible we close down below this neckline, and we could see some more sell-off there. On a weekly basis, last week may have been the highs with that little spike up. So we're closing now on a negative tone, but we're still closing more or less above last week. So it's not exactly totally bearish at this point. We may build a top for several weeks yet. And on the monthlies, well, we're still only 10, 11 days in here, but it's not looking great, but it's not looking bad either. If we sell off from here and we get down and we close below last month's lows, that would be negative. But if we hang out right here for the whole month and have a quiet month, then that could actually be a bullish sign. Pound dollar today down just a little bit, down about 20 pips. We had a midweek here Wednesday. We closed below the most recent lows, so that is a very bearish tone now, and it looks like we're probably going to sell off at least down to around the 157, 157.50 area. So we could get down into there and then maybe make another stab at these highs and quite possibly exceed them. We still haven't gotten up to that 163 level to kind of complete this move. So one more push up, maybe get up there, and then probably another sell off down to test these lows that we made around 148. Right now we're still hanging out on this trend line, you can see on the monthlies. So depending on how we close the month, we reverse all of last month's gain there, then obviously it's a very, very bearish note. US dollar against the Swiss franc up slightly today. Right now we're up about 1 point. We've been all over, mostly down, but it looks like we are forming a bottom in here. So if the US government gets their act together, this could serve as a pretty good bottom in here, and we could see ourselves maybe going out for another week here of consolidation, and then probably a move back up to around the 93, 94 level. And if we look on the weeklies, we can see we're forming a pretty decent bottom here also. Last week was probably the low with that little spike down there. And if we look at the monthlies also, we're kind of coming back, but we really need to burst up above last month's highs and well above these trend lines to get us really into some serious momentum here to move much higher. US dollar against Japanese yen, fourth day up in a row now, up 30 pips right now, pushing right on this trend line. We do have a little Ichimoku cloud here, a little bearish sign there. If we can break above this trend line, probably erase that Ichimoku cloud, and then we could see some pretty decent movement then from there, probably back up to the 100 area. If we look on the weeklies, we can see how we're right at the peak here, this triangular move here. And we're pushing higher, so it's really going to take a lot of momentum at this point. But once we got up above that 100 mark, we would probably start moving very quickly then. And we can see that kind of here on the monthlies also. We've really consolidated now for the last 6 months, and not a bad sign, certainly, because we're in the same range straight across. So it's actually fairly bullish, and we make one more move up here, it could be a pretty decent move to the upside. Euro Swiss enjoying a nice day today also. We're up about 25 pips and pushing back up to the 123.50 level. Been up pretty much all week this week. Really looking good, and these are probably lows. We should probably get down to test them one more time just to say that we did. So I'm not believing this rally completely yet, but you never know. This market has a tendency to really blow up sometimes, and we could see that move here very, very shortly, whereas we could jump up one day 100 pips and then take off from there. So not going to hold my breath, but it would be better technically if we did test that lower level. Euro yen, today we're up about 68 right now, pushing above that 133 mark, looking pretty good on the charts. We had this correction here for a couple of weeks where we just eased our way back into the trading range, and now we're popping back up. So we need to close back up above these highs, which is just about the 134.50, 135 level. So if we can get up there, be very positive and really start moving things along again. On the weeklies, well, we're below that trend line, but it's not a detrimental thing. We're still in the range here, so we need to close back up above it on the weeklies. We're not quite there yet this week, and probably won't close above it this week. So we really would need to close up at new highs next week. And then on the monthlies here, we're still looking pretty good. Still looking for us to run up to that 137, 138 level, and probably will do it soon. It's just got to get its mojo going again, and we'll be up there. We could be up there really in a matter of a couple of days. It's not that far away. U.S. dollar against Canadian down a little bit today, down about 33 off of that good employment number there out of Canada. But overall, we still look very positive for the U.S. dollar here against the Canadian. So we've run up here midweek this week, and now we're pulling back a little bit. So a little bit of a healthy move here. Come back maybe one more session, and then we could move up again. And on the weeklies, looking pretty good here. We're closing up here at a decent level off of the highs for the week, which is not good. Would really like to have seen it close up by the highs, but nonetheless, still not bad. And if we jump out to a monthly chart, we can see we're still in this consolidation range, but we're getting ever closer to breaking out here to the upside. So maybe this will be the month we close up above last month's highs and we just start taking off. So see how that works. Australian against the U.S. Up 13 right now, having a very, very difficult time here running up to these highs. We are testing these highs, but we're really running out of momentum. Looks like it's going to turn around from here. If we were to break this level down in here, this kind of baseline, what it's become, if we close down below that at any point here in the next week or two, we could see this thing fall very, very quickly from there. If we jump out to the weeklies, we can see how also we're grinding higher here on the weeklies. Just can't quite get it going. Not enough momentum, not enough buying enthusiasm here to meet all those sellers out there. So at some point here, it really looks like the sellers are going to win. And on the monthlies, well, we're of course about a week and a half, 2 weeks into the month, and it does look like a decent correction here. But at some point too, we could just turn around and go right back down. So overall, still negative on it, still bearish long term and even short term. So that is it for this week. If you're not a member of FX Addicts, please stop on by. You can get a 7-day free trial. Check us out. And if you have any questions about currencies or interest rates, by all means, give me a call or shoot me an email, tim@fxaddicts.com. Thank you.